Hello and welcome to Nanny Village. My name is Marquis. I'm the founder and the CEO. And a big part of what we do here at Nanny Village is not just match you with an amazing caregiver and nanny, but we really want to give you the best tools and resources available to help you thrive. That is why I am so excited to introduce you to Chelsea Mills. Chelsea is an expert in all things payroll, benefits, and nanny tax. And she also works with HomePay, who is our preferred household payroll partner. We're going to answer all of your frequently asked questions. But first, Chelsea, would you mind just introducing yourself?
Sure. Thank you so much for having me. My name is Chelsea Mills. I work with HomePay. We are a household payroll and tax provider. So this is all that we do, working with families who are bringing in help in the home. I've been with HomePay for over 8 years. I am the partner relations manager. So my role is to work closely with our nanny agency partners and their clients and nannies to make sure that the educational concept of legal pay is easily available and easily accessible, and also to assist with onboarding if clients decide to use our service to pay their nannies.
What are the top things that all families should keep in mind before they hire a caregiver for their home?
Yeah, so I get a lot of questions about taxes and payroll, if it's part-time versus full-time, if it's a nanny versus a babysitter. So I think there's a lot of maybe confusion or misconceptions about what actually triggers tax liability for household employers. And we look at two tax thresholds that are specific dollar amounts that require a family to report withholdings and earnings for nannies. So if they pay an employee more than $2,400 in a calendar year, that's a Social Security and Medicare threshold. They're required at that point to withhold taxes from the employee's wages and report a matching portion of those taxes to the IRS on the employee's behalf. The other threshold that we look at is unemployment. On a federal level, the $1,000 per quarter threshold is for federal unemployment if they pay any combination of employees that total amount. So if they had, let's say, a couple different nannies or babysitters throughout the quarter that all together total that $1,000, then the family should be paying into unemployment. And that is required so that if an employee loses their job due to no fault of their own, they have those benefits to fall back on while they're finding a new job. Some states have a little bit lower unemployment thresholds, and California actually has a state disability threshold of $750 in a calendar quarter. So I like to bring those thresholds up because I think that there's confusion if I have a part-time nanny that I won't have to do taxes, but really it's how much are you paying this person? That's what triggers your liability as a household employer. So that's the primary one. And then I think there's a lot of confusion about W-2 versus 1099. Is my nanny an independent contractor, or are they really my employee? And what we say to that is most of the time, if not all the time, household employees are going to be W-2 employees. They're going to be an employee of the household. 1099s are for independent contractors, and independent contractors are really running their own business. They are providing their service to the public, so they would have multiple clients at one time. They're directing the work, setting their own schedule. So it really comes down to who's controlling the work, who's setting the schedule. And generally that's the family. The family is letting their employee know, okay, this is when we need your help. This is how we prefer to have things done, or this is where we need some assistance in the home. And so they're really directing that process. And that's where the W-2 versus 1099 conversation comes into play.
Are there any particular risks that are involved when you pay under the table?
Going above the speed limit or running a yellow light, it's all about comfort level with liability. And really, if employers or families are paying their employee incorrectly, it is considered a type of tax fraud. Now, a lot of families get very freaked out. That's a very intense term. I get asked, is there jail time associated with that? And no, we haven't seen anything like that. But what does happen often is if a family gets audited for whatever reason, maybe a business reason or a personal reason, if an employee files a wage dispute or an unemployment claim or a workers' compensation claim because they fell and were injured in the home, all of these things can trigger a red flag to the IRS and the state if they're not able to find correlating tax returns associated with this employee. So if nothing has been reported and an employee files a claim, they're going to say, hey, we don't have anything on file. We need to get this corrected. And a lot of times when that happens, the pay has been going on for a while. And so the family has to go back and fix things. And when that happens, there's associated penalties because things are late and interest because things have been accruing over time. So it really becomes a costly mistake for families. And depending on the time frame, and certain states are a little more harsh than others, those dollars can really add up. So it really just behooves a family to do it from dollar one if they know they're going to cross those tax thresholds that I mentioned earlier.
Since you mentioned that, is there a way, and can HomePay help families who perhaps were paying under the table and then realize that, paying legally is the way to go? Can you help them in that whole process?
Yeah. And really, January, February, March, when everyone's getting their taxes together, we see that every year. Families didn't know that they had requirements, or it just got left on the table and they didn't quite get to it, which obviously these families are busy. They're hiring help. That's why they need the help in the home. So yes, what we will do is get everything caught up. We file things retroactively for the family. When those penalties and interest notices come in, which they generally do from the state, we'll help the family kind of work through those. We'll ask if we can get them waived or lessened for the family, which we can often do. And so we really try and make that process as painless as possible. And we've had some clients go back years. I think the longest you can go, or the farthest you can go back, is 7 years, I want to say. And normally it hasn't been going on that long, but we can definitely get things caught up for them, no problem.
What sorts of benefits can families add to their nanny's compensation package?
So we were so excited because in 2021, we saw some really great increases in tax credits and tax breaks available to families. They more than doubled. So far in 2022, we think they've reverted back to what they were. And what those are is there's kind of two things we look at that are available to families. So if the family has, through their own employer, access to a dependent care account or flexible spending account, they can set aside pre-tax dollars to use towards childcare. Generally, a certain amount comes out of every paycheck that they earn that gets set aside, and then they'll submit the pay stubs we provide or the tax returns we provide to their HR provider, and those pre-tax funds are then given back to the family. So that's up to $5,000 per family per year. We saw in 2021, it went from that to $10,500, which was huge, but it did go back to $5,000 for this year, although we're hoping we might see some revisions. So stay tuned for that. And then the child dependent care tax credit. That's available when families file their personal taxes at the end of the year, but they do have to file a Schedule H in order to claim those. So they do basically have to show proof that they've been paying legally to get those tax credits. And that is up to $3,000 for one child that they can get tax credits on, and then up to $6,000 for two or more children. The kicker with those two things is that combined, a family cannot claim more than $6,000 at this time. So if they get $5,000 with that dependent care account, then they can only claim that additional $1,000 at year end. If they don't have that dependent care account, then they can claim all of the $6,000 through the tax credit. So it depends on what the family has available to them. But generally speaking, what we see from one or both of those tax breaks or credits, it removes or at least significantly lessens the additional tax liability that families see from paying legally. So I think that helps to cushion the blow a little bit of, okay, we found a nanny, here's the rate we agreed on. Oh, now we have to pay taxes. And how much is that? It's roughly 10% above and beyond the employee's wages. So you want to budget for that as well. But this really helps reduce that additional liability.
How much can families expect to pay on top of their nanny's hourly rate?
Sure. So we always recommend negotiating on a gross pay, so a pre-tax basis. So just for easy numbers, if it's a gross pay of $1,000 a week, the nanny's taxes will come out of that. So depending on the nanny's personal tax situation, that could be anywhere from 10% to 25% that they see taken out for their tax portion. And then the family wants to budget an additional 10%. So really they want to look at an overall cost of $1,100 per week. And the extra 10% is covering their portion of Social Security and Medicare, their federal and state unemployment taxes, and then any minor state taxes like California has state disability and an employment tax. So 10% is a very easy number for families to think about. It's never more than 10%. Sometimes it's a little bit less, sometimes it's 8 or 9%. But I always like to say 10% because I can easily do that math in my head. And it's the maximum that families would want to set aside for those tax costs.
How does overtime pay work? Can you speak to that?
So on a federal level, overtime applies to any hours over 40 in a 7-day work week. So for example, our HomePay system runs Saturday to Friday. So we would gauge any overtime hours from Saturday to Friday because Fridays are paydays in our system generally. So that's a federal level. On the state level, California meets that, but also has some daily overtime requirements. So for any personal attendance, which is going to be an employee who's caring for other individuals 80% or more of their work time, they receive overtime for any hours over 9 in a day. And for non-personal attendance, which would be more of a managerial role, those household employees will receive overtime for any hours over 8 in a day. So you want to keep those daily amounts in mind as well as the weekly 40. We help calculate that and our system will automatically help track that as well. If an employee is living in the home and it is considered live-in, meaning they're living or staying at the home for 5 or more days per week, then the weekly amount goes from 40 to 45 hours, but those daily overtime amounts would still apply.
Would you mind sharing about tax-free benefits for families?
Sure. So there are some great benefits that a lot of families and nannies may not be aware of that really help sweeten the overall compensation deal, but also lower the taxable amount for the family and for the nannies. A big one is health insurance. So if a family has one household employee working for them, they're able to contribute to an employee's health insurance policy up to 100% of their premium costs. That's a big one that we've seen as of late, families encompassing in their package, because what it does is we all have to pay for health insurance anyway. So it sets aside some funds for that health insurance policy. And it really equals or is greater than the initial take home pay if they were maybe negotiating for an extra dollar or two per hour. Another one would be cell phone reimbursement. So if the employee is required to have a cell phone and be accessible on the job, which in our day and age, everyone is, the family can contribute towards their cell phone policy costs up to 100% as long as that policy is in the employee's name. So as long as it's not a family member's policy, but it's their own individual cell phone. We have some other ones. Tuition is a big one, depending on if the employee might be a part-time student when they're not working. And so historically it's just been tuition, but recently they have added into that student loan reimbursement. So if the employee has student loans that they're still paying off, the family can contribute to that tax-free up to $5,250 per year, which is an exciting thing we've seen come out recently. Transportation would be the other one. So any public transportation, metro, buses that the employee might be taking to and from work, any parking costs if they're required to park in a paid parking lot or parking spot, the family can reimburse for that up to it's $280 per month this year. And then actually mileage reimbursement is a requirement in California. So if the family is having the employee drive their own vehicle while working, so not commuting, but if the employee is running errands or taking children to or from school or activities, that would be considered driving their own vehicle while on the job. And so they would need to reimburse for those miles. And the current rate for this year is 58.5 cents per mile. So that's a requirement, but it is a tax-free requirement.
Can you speak a little bit about all of the services that HomePay offers? Like how many ways can you help families on their role to being an employer?
Yeah, our goal is to be kind of a one-stop shop, being a fully concierge payroll and tax service. So what that means when a family registers with us and has hired and is ready to go is we're going to set that family up as a household employer. We're going to set up their federal and state tax accounts as a household employer specifically. So it's separate from any business tax accounts or anything else that they've maybe used in the past. We're going to calculate their employer taxes. So every pay period through their online portal, they can see that tax amount updating. They can see the taxes coming out of their employees' pay because their employees just going to see their after-tax net pay amount. And we're calculating both sides for them. We do direct deposit payroll. So the family chooses how often they want to pay. Our system will debit the payroll from their bank account and we'll credit it to the employee's bank account on payday. And we can customize that however is needed. Something that a lot of families don't know is household employment taxes are due quarterly, sometimes monthly in California specifically. And so we take care of that for them as well. We're going to pay in their employer taxes. So that 10% we've been talking about, we're going to pay in the taxes that have been coming out of the employee's paycheck each pay period. And then at the end of the year, we'll make sure the employee gets their W-2, which is what they should be receiving from the family, and filing with their taxes. And we'll give the family their Schedule H, and that's what they file with their taxes as well. And anything else that comes up, any paid sick leave, any paid time off, we can track and accrue that in our system. Any types of reimbursements, whether they're taxable or tax-free, we can really customize it so that everything is inclusive in our service. The only thing that we don't handle specifically at HomePay is workers' compensation in California. That is something that is required of all families, but it can only be done through either the home insurance company or the state. And so I would say each family should look into that with their insurance company. Most insurance companies in California can easily add that on to their home policy.
How easy is it to work with HomePay?
So I would recommend that either give us a call or email me, and I'm happy to give them an overview of the service. And what we do is provide them with a link to our registration online. And our online registration is going to gather their employer information, which takes no more than 10 minutes, 5 to 10 minutes. And from there, they can invite their employee to onboard themselves. So they can send them an email. The employee can enter their sensitive data on their end, or we can send forms to be completed via DocuSign. So we can easily separate the onboarding process and streamline it for the family and for the employee. And once the employee enters their information, we have accounts up and running within 1 business day. We do have a complimentary first month for Nanny Village clients. So as long as they let us know that you sent them to HomePay, we'll make sure they get that first month free to really just get a free trial of the service, make sure everything is going smoothly for them.
I have to say, Chelsea, you have helped so many of our families. You have helped me so many times. I appreciate you so much, always being available to answer questions. And thank you so much for your time today. I appreciate you. And I look forward to continuing our work together to help families and nannies be the best that they can be together as a partnership. Thanks again.
Absolutely. Happy to help. Any questions, anytime.
Thank you so much, Chelsea.